my specialization is succession planning, business succession planning. And business succession planning, let me tell you, there are 4 types of people who go into this sort of consultancy. First, what is succession? Well, we'll learn about that. But I want to concentrate on the issue of family business first, before we talk about succession. And family business is basically a business which this entrepreneur wants to pass on to the next generation, right? That means he wants to have someone succeeding him in this business, right? And there are various issues involved in this succession process. And there are 4 types or 4 categories of people who would be involved. Now, family business consultancy is very new in Malaysia, in this region. It is very well established in the US, in Europe, in Australia. In Malaysia, of course, there are various races here. The Chinese have always been there. I think they are in the 3rd generation there. You see YTL, they're in the 3rd generation. You see the Genting family, they're also into the 3rd generation. The Indians, you see the Indian Muslims in Penang. They've always been entrepreneurs. And the Malays, well, the successful ones have come from the NEP. This has been the takeoff point for most Malay entrepreneurs, with the support of the government. So most of the Malays are now going into the 2nd generation. So in terms of the potential of this business, it is there. And who are the sort of people who would be involved in this process? Well, first and foremost, the lawyers. It involves legal issues and legal documents, so lawyers are normally involved. But how many lawyers know about business succession? Lawyers know about trust, yes, some lawyers. Not all lawyers, because trust is something which is not a favorite topic, even among lawyers. It's a compulsory subject which we have to get through when we study the law, because it's so like one of the more difficult subjects. Everybody just wants to pass the subject and get on with their life. And nobody thinks about practicing trust law. And this is the irony of it. One full circle and I come back to trust law. And the irony of it, as I said again, is sometimes the money is where other people don't want to do. And what you have to do actually is to make the public which needs it be aware of why they need it. So lawyers have always been there. It's the type of lawyers who would want to get involved in this family business succession. Second are the accountants, particularly the tax specialists. As we go through the slides later, you will notice that one of the big issues in wealth preservation is corporatization of wealth. And corporatization of wealth simply means transfer from an individual name into a company's name, right? And this transfer involves stamp duty. And this is where the tax planning is important to ensure that there is tax efficiency on behalf of the client. And of course, in some certain cases, there will be corporate restructuring when they want to do succession, depending on the plans of the patriarch. Some people want to go for listing and all that. The third category of people are the psychologists. Now, psychologists as a profession has not taken off here. Maybe when people talk about suicide cases, yeah. There's been a number of suicide cases in Malaysia, and people start talking about why people commit suicide. But apart from that, nobody talks about how important the psychologists are. Actually, in the field of family business consultancy, the psychologist is very important because humans will have differences of opinion. And there will always be this difference between the father and the son. And down the generation, conflict is a given issue. And you need psychologists, you need third-party people who can give detached opinions and advice to mend this relationship between family members. So psychologists are very important. Now you know why I want to do psychology, right? Although I have a legal background. Lastly, in the other part of the world here, in the US, there are people who call themselves financial planners. There are some accountants who are also financial planners, but financial planners are very new. As a profession, they do not have the credibility. I mean, you go and you introduce yourself as a lawyer, people know. People think you do criminal law. They ask you everything about Anwar Ibrahim sodomy case. They ask you everything about whether the Sultan has got discretionary powers to appoint the MB. Although it was never your chosen practice, but everybody thinks if you're a lawyer, you know everything, right? So financial planners, accountants people know, doctors people know. What do financial planners do? And the thing about financial planners is people always say, why do I need to pay you to tell me something I already know? This cliche always comes about. So what am I paying you for? And these financial planners, if there are amongst you who have taken financial planning qualifications, as I have done, I have taken the whole thing, the CFP, the RFP, the IFP, I've done everything. It's that I don't want, there was an offer for me to build the biggest financial planning setup in Malaysia, because I have that qualification and others, but I felt that I wanted to stay in the legal profession. One of the reasons is the issue of credibility, right? So financial planners are new in Malaysia, but financial planners over there, they are the ones who actually make the most money. Because everybody needs financial planners. Financial planning is life planning. Here, people don't understand. Financial planners here sell products. They sell investment products, they sell insurance. The minute they open their mouth, people run already. And then if you are your friend, the guy's your friend, you just buy something so that, let's change the topic and get on with something else. But financial planners play an important role in family businesses. Why? Because they are normally people who they are jack of all trades. They know a little bit of everything. So I have a financial planner friend who boasts that he's got LL, look like. B don't have like he can talk like a lawyer. He says he's better than some lawyers. My drafting also better than some lawyers. My English also better than some lawyers. And so to an extent I can agree with him lah. End of the day I said, you still LL only. Right? And then he talks about tax. He reads up all the tax laws. And I'm sure if you have an accountant who does not read tax law, he may be better than you. Because that is his job. He reads it every day. And he reads property gains tax, and he reads about company law. So a financial planner knows all this. And why are they important in this area of family business succession? Is because they try to create a one-stop center. They become like the general practitioner, where someone goes and then, okay, I'll do the structuring. Or you need a lawyer? Well, this is it. I'll find a lawyer for you. You need a tax planner? I'll find a tax planner for you. You need a psychologist? Okay, if it gets deeper than what I can't handle, I get. And this is how he plans. That's why a financial planner is important, but it's not reached that stage yet. Because a financial planner must know a little bit of everything. And also among us, the lawyers, the accountants, and the psychologists, if they are there practicing, nobody wants to do through the financial planner. Why? We have this KYC issue, know your client, and if it goes through the financial planner, it's like we are taking instructions from him. Like he is going to be the one-stop center, and he calls us and say, I have this client who needs this. And you just take instructions from me. What are your fees? I'll negotiate. Okay? He goes back to the client and he tells us and all that. So you don't actually get to the client itself. So this is not something which most lawyers or even accountants are happy with. But that's what the financial planners do. And that's what they will have to do if they want to play a role in family business consultancy. So that's the backdrop of what we're going to talk today. Family business consultancy, and the area today is family business succession. Okay, family business succession. Right? Now let's just move on. Now, we are going to talk about what is wealth preservation and what is succession planning. We're going to talk about the legal structures and foundations. And I'm going to relate this to why tax planning is important. And to a certain extent, corporate restructuring in family business. Now, before I go on, just it's a general rule. In this Malaysia boleh land, you have 3 types of assets when you want to pass on. One, you have assets under your name. Very clear. The asset is under your name, is yours. Second, you have an asset registered under your name, but you are a proxy for someone. Right? Clear, yeah? And thirdly, your asset, for some reason known only to you and the proxy holder, someone is holding proxy for you. Right? So life can be very complicated if they do not list down the assets. And when we do family business succession, this is very clear. And if your client is a politician, then it's going to get fun. Right? All these proxies will come in. And I don't want to say specifically whether it is government party politician or opposition politician or whoever. It's all the same as far as I'm concerned. I'm not here to talk politics. But rest assured, the fact remains that proxies are everywhere. Right? So when we do restructuring, when we do this family business succession, we better be clear actually who owns it. Because someone comes and asks me, my asset is under third party name, how do I create a trust? How do you create a trust when the thing is not under your name? Actually, that person is the one who's got to create a trust because he's holding on trust for you. But, it gets very complicated here when he wants to do a trust for an asset which is on trust with someone else, and it's a secret trust some more. Secret trust, nobody wants to know. Nobody's supposed to know. Very, very secret one. Suddenly all the parties die. It stays a secret. Nobody knows also. Right? Serious, it has happened. This Malaysia boleh land. Yeah? So, what is wealth preservation? What is succession planning? Now, before we go to that, we want to understand about the preservation of family wealth. We have to understand. Maybe you already know, but we'll go through it. We talk about the life cycle, the individual life cycle, just to remind ourselves that life is very fragile, that we got to go sometime. There's a joke that says when we go, we hope to die peacefully in a bed in our own house, Not enough in a bed, you want to die in an accident, gruesome, or in the airplane, whatever. You want to die in a bed, but you must add in your own house. You want to die in a hotel somewhere with, shoddy hotel with all that, suddenly, You have cases of people having heart attacks in a hotel for whatsoever reason. You don't want that sort of news. So, then we talk about corporatization of family wealth, and then the preservation. So here we are. You've got your notes, maybe you can refer to. As we go through this life cycle, you will notice you can also look where you are on this life cycle. And what life planning is all about means you actually, especially when you talk about retirement planning, how much money you need before you actually expire, right? 55 used to be retirement age. And they say 75 is the, the age you go, mortality age. 20 years, retirement. 20 years where you have to live. And you only start thinking about building your retirement fund 10 years before retirement. You try to balance your books, especially those people who are in the sandwich generation. You got to take care of your parents, you got to take care of your children, and you still got to plan for your retirement. This is where you have migraine. Cannot. You start planning, you go to a financial planner, you do all the calculation, negative. Negative. You guys understand what I'm saying or not? But this is life lah. You make the best out of it. You find and define your happiness. What is happiness to you? We were having this discussion among friends. Some say happiness means we must be happy. Some say happiness is making the people you love happy. End of the day, you define your own happiness, because what you don't want is stress. Stress is what kills, right? So moving on, you can see through that, if we do that, individual life cycle, and of course how you choose your life to be a working individual for someone or an entrepreneur. But you still have to acknowledge these phases of life. Okay? For those who are very young, they will say, oh, still a long time to go. For those who are 50, well, it's a matter of perspective. Some people at 55, they feel they're retired, don't do anything at home, just stay at home. For me, I will retire when I expire. No question of retirement. One of the reason is I myself also did not build up a retirement fund. So you carry on working lah. It's just that you reduce the hours. But having said that, you guys must choose what you are passionate about lah. I mean, really, I got disillusioned with the legal practice when I was in 2000. And I chose to go on, as I said, lifelong journey, learning. And I've come to the point where I'm enjoying what I'm doing very, very much. You know, talking, not necessarily about the law, but something related to the law. You know, because I always said I wanted to be a speaker, motivational speaker. And I said, who wants to hear a lawyer talk? Very dull and boring, you talk about the law. So I'm one of those lawyers who never refer to acts of parliament. I won't go and have my talk section, this talks about this section, this talks about this and all that. That one I will just say, this is all what's all about, you can go back and read by yourself. That's how I will conduct my classes if I'm talking about law per se. So none of my content you will talk about sections per se, interpretation per se. For those who've got problems about the sections in the law, you can see me outside lah. Won't talk about here. Right? To me, it's very dry, very dry. We want to talk about people, we want to talk about life, we will talk about issues. That's what we want to talk about. All right? Now, I said about corporatization of assets. What happens if you don't corporatize an asset? It stays under individual name. And when a person passes on, it will be stuck under the probate process. Now, we talk about distribution of assets. You can distribute during your lifetime. You can distribute through a will for those who are non-Muslims. For the Muslims, please don't start thinking you can distribute according to how you want, because you have to understand the fara'id first. If what you plan is consistent with the fara'id, then your wish will be carried out. Otherwise, you better start thinking of another way. Okay? Because the fara'id will dominate the distribution of estate of a Muslim. Right? So, corporatization means putting it under a company. When you put it under a company, it does not become your asset per se. Of course, the next question is, the shares are under your name lah. Because you merely transfer the asset to a company and you get the shares issued. So the shares are under your name. So the shares become part of the estate. But there is a whole lot of difference. Even if you don't transfer the shares into a company, I mean, you don't do anything. I mean, you transfer the asset, landed property. Having an asset like land and property stuck under the probate process is going to take a long time to clear. But if it's just shares, if there's no dispute, people talk about pre-signed Form 32A, talk about power of attorneys, a lot of ways, as long as there's no dispute. But if there's dispute, then you better beware. So the next step is, of course, to put it into a structure which preserves. And this is where the trust or the foundation comes in. So the first step is to corporatize. That means not under your name, the asset itself. Then the shares will have to be put under a wealth preservation structure. Now, all these transfers requires a tax consultant to be tax efficient. And this is really one big area which you all who are, practicing in tax will have to look at also. Now, we talk about distribution, we talk about preservation. This applies whether it is a Muslim or non-Muslim. You build up assets. You buy, you keep. Some people buy, people sell. Some people are into property. Some people are into stocks and shares. Some people are into gold. You have all sorts of assets, right? And you have a choice whether you want to buy under personal name, you want to buy under company's name. Of course, the banks see it differently. They will give you a lower margin if you buy under company's name. They want people to buy under personal names. It's also more difficult if you buy houses under companies because you don't have the MRTA. But this is what planning is all about. Because if you buy everything under your name, and if you want to transfer, there will be a tax issue. Right? So planning, now that if you are an investor, you start planning, okay, from now, I'm going to have an RPC, real property company, I'm going to buy under an RPC. Okay, that's one way to look at it. Now, what happens if the company is under your own name? I mean, the assets under your own name. Now, back to the family business, the entrepreneur, you will have these entrepreneurs, very enterprising. They start by buying properties under their name, and then they rent it out to the business. So now, the business is renting from them. So to a certain extent, then they capitalize, but they don't transfer the name. So you have company asset under your name. Then along the way, when the company is doing well, you want to buy a big bungalow, 2 million. But you're taking very small income from the company, so you cannot justify repayment. So the bank say, your company can get loan, no problem. So now you buy a personal asset under company name. This is the same like the proxies also. Although the company is your own company, technically they are holding on your behalf. And also the asset which you are holding for the company, you are proxy for the company. Now it's okay at your level. You just imagine the second generation, the third generation, how the havoc that can appear here. You know, and for those Muslims among us holding Malay Reserve land, those in Kelantan Malay Reserve land, those in Sabah and Sarawak holding native land, some of these land laws do not allow you to corporatize. So how do you do this? There's been a lot of disputes where the father buys land, and then like Felda, for example, they don't allow more than one name in the title. So what happens is it gets to one name, and this person is supposed to hold on trust. On trust, no document one. When you get to the third generation, the eldest son dies, and he goes down his line only, he doesn't go to the side. So all the children of the siblings get sidelined, and the property is worth millions. And this causes a lot of family feuds. Sometimes it's not even in family businesses. Okay, do you get the picture now? How complicated these issues, the more assets you have, the more complicated life can become. Right? So what I'm saying here is, to distribute or to preserve, you must make a decision. You are holding a lot of assets. You are a high net worth individual. You may be in business, you may not be. It doesn't matter here. The question is, you have assets, and you have to decide what you want to distribute now, and what you want to distribute later, and what you want to preserve. If you have assets worth millions, it's going to spoil the child if you give them everything. And secondly, you may not even get to the third generation. You heard the saying that family business only lasts 3 generations? Well, if they don't plan, that's what it's going to be. Academic literature confirms it. You know, the patriarch builds it up, the second maintains, the third one spends, the fourth one don't get anything. Yeah, that's what happens. Right? And the Malays in Malaysia hasn't even got started because the problem of faraid nobody can understand yet. First generation going second generation. You know, the successful Malay entrepreneurs in Malaysia. So to distribute and to preserve, I say, to whom how much, either during their lifetime or after death, to preserve for future multi-generational beneficiaries. You have to make that decision. Okay? And if you guys are not in that league, maybe you can think for your clients. These are the potential people who's going to give you business, yeah? Okay, moving on. Business families, corporatized wealth, high net worth individuals, non-business families. Why do I segregate this? There are two types of high net worth individuals in Malaysia. One who are in business, and of course, it must be doing well now. It's no use having a business wanting to pass on if it can't even break even. If you can't break even, you are not giving an asset, you are giving a problem, you might as well sell the business, and settle the problem yourself. Some people think that, they want to pass a legacy, but every month, every year, you still have to firefight between issues of cash flow and, trying to pay the bank, trying to pay the salary and all that. What's the point of handing over to your children? If you yourself, when you build up the business, you can't even balance the books? Maybe you think it's fun. I'm sure they don't, right, at their level. So business families, they must corporatize. At the lowest level, you have these partnerships. My research is on lawyers. So the questions I asked the lawyers when I was doing my doctoral research, the senior lawyers, more than 20 years in practice, and I said, how would you plan succession in your firm, assuming that you want to pass it to your children? And they will say, and for those among you who have got ideas to do a doctoral research, you can take an extension of my research and do it for accountants. Okay? There is an academic gap, a gap in the academic research. The only difference between accountants and lawyers is lawyers can't corporatize. Accountants can corporatize or not? Cannot. But everybody has got one leg on the other side, Now the big legal firms also trying to do that. What can be put into, basically at the end of the day, you took a legal practice, only those people go to court actually need the license, the rest all under consultancy. Because how do you plan under a partnership? Very difficult. Succession under a partnership also very difficult. How do you value also very difficult, right? Okay, this is the life cycle. It does not necessarily only relevant to family business. It's all business, startup, 1 to 2 years. Now, academic research has it that the first 1 year, 95% of new startups fail. For whatsoever reason. Okay, whatsoever reason. And then there's growth, formalization, when they actually survive. Then you have the proper processes. The boss was doing everything, now he's got a secretary, then he got accounts person, and then he got HR person, then he got property marketing person and all that. And then when it clears 10 years, it becomes matured. And at this point of time, 10, 15 years, when it says matured means has value, the entrepreneur will have to decide, what's the exit? How is the story going to end? He started a business, it's doing well, worth a few million. What's he going to do? He has to decide at that time whether he wants to sell the business and take profit. But most people don't want to do that. You take profit, what am I going to do? These entrepreneurs are people who cannot sit still. Unless they have got another idea to start another business, they sell and start up. But you won't find entrepreneurs selling and just keeping quiet at home counting their money. It's not the money which is important to them anymore at that level. But it is definitely an option. Maybe they're not well, they may do that. Or maybe they take up a teaching post just to share their knowledge, maybe. The second option for them is to go for listing. If the company is big enough, go for listing. But it means you have to borrow more money. Have you got the appetite? At some point of time, this issue of this risk tolerance, you're taking on more money. So what people do, when you go into big loans and millions of dollars, you start taking your assets and put under trust or put overseas and all that. Just in case it doesn't work out, at least you get bankrupt here, your assets are all structured so that, the family still got some wealth, if they dare to take that risk. The third option is you sell your company as part of a group going for listing. That means you got shares in a public listed company and you tie yourself up in management, 5+5, executive chairman of this subsidiary, with lock-in, all the perks lock-in. But of course, they will tell you minimum profit guarantee. Right? But at least going forward what you're going to do. You're 55, you're 50, 5+5, you're 60, okay your EPF ada, semua ada. You've got your shares in public listed companies. Look at what happened to, what's this company? OSK. Twice over, man. Sold, got back, sold, got over. I mean, doing anything other people are doing corporate restructuring, he's making millions. OSK? Ong Leng Huat? So, question is, what does he go do? What's he going to do with that money? And how is he going to get his future generations to benefit? You know, at one point of time, these super rich people, they will think, I can't leave all this to my children. One, the third generation may not get. Second, it will spoil them. There's a joke about Bill Gates. He went to a restaurant, and after the restaurant, he tipped the waiter $5. And the waiter looked at him. Only $5? He said, what's wrong? Don't people normally give you $5? He said, yes, that's normal, but you are the world's richest man. Yeah, so? Yeah, last week your son was here and he tipped me $1,000. So I don't understand, your son can give me $1,000 and you, being his father and the richest man in the world, is tipping me $5. It doesn't, isn't jive. And his simple answer was, my son has a rich father, I don't. Okay? Now, if you are not in the category of what I'm talking about, think for your clients. Because this is where you are going to make your money. They need you. If you can position yourself to help them. Okay? So this year we're talking about different exit strategies when the business is matured. Because if you don't do anything, the business is going to decline. At some point of time, you just can't carry on like this. A lot of people who do good businesses, but they don't have a plan. And then they start worrying, how are my children not interested? How, if I die tomorrow, how suddenly heart attack? Then what? Then you want to do a sale of your company, you're not going to get a good price. And if your company is good enough and a company going for listing wants to take it up, they will want you to work and make sure the money continues to come in. So if you're not in good health, that's why succession planning, not just at the level of ownership, but also at corporate level, who is going to continue managing the company, right? Now, this is where we go to the next step. Succession planning is just not about shares. Succession planning has two parts. Ownership succession, which is what we're talking about, preservation of structures and the shares going, put into a structure so that there's no fragmentation and everything. But there is also management succession, which is basically passing the baton. If you have a successful business and your children are not interested, what do you do? You're simply not interested. Thank you, but no thank you, Dad. Or they're interested. But you have heard of this. I like the business, but I don't like the way my father runs it. And there are some children in family business who feels that they are, maybe some of you are in the second generation here, that they are overworked, underpaid, unappreciated. Does that sound familiar? Second generation. If you are not second generation, you have the second generation coming in, you think about it. Second generation are saying, I am overworked. Why overworked? Dinner table also, daddy is still talking about business. This is 8 o'clock at night, If I go and work elsewhere, 5 o'clock, I shut off. Here, dinner table, hey, this one you have to do, this one, please remember this one and all that. You're still talking business at 8 o'clock. Now, someone is laughing, he knows it's familiar to him. Right? Underpaid. Why dad says, hey, I give you a house, you stay in my house, you don't have to pay anything. I give you the family car already. You don't expect to get the same pay. Everything I'm providing for you. Food on the table, the house, the car, I pay for everything. Why should you get the same with everybody else? I'm already subsidizing everything. And the son will say, if you're paying me the salary market rate, I think I can get my own car. I can stay in my own place. I can manage my own expenses. But of course, there's always communication gap. They don't get to that conversation. The most is they tell mother lah. And I have a client. He says what? Aziz, my son cannot lah. my eldest son. I put him there. He does not carry out my instructions, And sometimes he override me, I always fight with him. I want to tell him, go and find another job, but I don't know how. I said, you can't do that. I said, why? His mother is going to be very angry with you. You're going to be sleeping on the sofa. That's the problem about family business. And there are people who may be great, got all the capabilities, but they simply can't take it that they are under the father's shadow. Why? Someone would say, his friend, you easy lah, you father give you everything, senang one. And suddenly the guy feels like, it's not mine, Oh, father, what is it that is related to me? Nothing on my own, no sense of achievement. He would rather build his own empire. So there are also cases like that. How do you manage this? And this is where the family psychologists come in. The lawyers can talk structure. The accountants can talk tax. It's all about money. It's all about structures, legal matters. But all these issues, who to talk to? Who to talk to? So that's why psychologists, or even if we are not in that, we need to have some knowledge. So what did I tell this friend of mine, this client of mine? You can't sack your son. So what options do I have? I said, you appoint a deputy CEO. Now who do you have? Your son is virtually number 2, in the company. Right? And you can't get along with him. And you can't sack him. So I suggested he took a deputy CEO and give full mandate to the deputy CEO so that his son reports to the deputy CEO. If anybody is going to do the sacking, it's going to be the deputy CEO. So that the decision will be detached and unemotional. It will be based on professional, matters. But it's up for him to think, like that now, cash flow lagi kena bayar, how much the deputy CEO is going to cost me? Again, another issue. I said, look, I cannot tell you so much lah. The next one you have to think of yourself lah. So ownership succession, management succession is what comes into the family business. You have to understand these issues. Those who are in it understand. Right? And one of the things, when you talk about structure, when you talk about tax, this family governance issue, we are only talking first generation, second generation. What about the third and fourth generation? What about children who are not in the business? You pass on second generation. I said, no problem. All my children all follow me. Everybody, united, no problem. And there's some people not in the business. For some reason, they have got their own professions. They have got their own business. They don't want to come in. You got children in the business. Fine. Now, how are the people who are not in the business going to benefit? How are their children who are not in the business going to benefit? What's the whole purpose of wealth preservation if there are no benefits? End of the day, one of the issues has to be people who work in the business get paid. Even for that matter, I tell my clients, you must pay 1.2 market rate for your children working in your family business so that they have, they are committed. They have the incentive to work in the family business, not, if I work outside, I can get more. I am actually helping my father. You don't want that. If you can afford it, pay 1.2. Check out the market rate, pay 1.2 factor. So that there's no issue of them feeling that they're underpaid. Right? Bonus, pay them 1 or 2 months extra. But you put the bar very high. Only the best will get into the family business. And you have to set the benchmark so high that if they are not good enough, you professionalize the management. So then you say, what's the benefit to the family if everything is professionalized? This is one thing now that entrepreneurs in Malaysia have to understand. I don't know how you are advising these small entrepreneurs, but I tell them they must have a dividend policy. Why? Because if the shareholders get dividends, the people who work get salary. The problem at the patriarch level, he doesn't care all this left pocket, right pocket. It's a tax game. If he wants, he take the money, all advances here, borrow here, everything can do. As long as, let's just be frank here. Sometimes if it breaks the law also, it's my money. And then as long as I don't get caught and all of that. But when you get to the second generation, you can't do that. You are one person, you decide everything. When you get second generation, if you don't have a dividend policy, the only ones who are benefiting are the children who are working in the business. They will give them higher salaries, higher bonuses, better perks, and declare no profit. Therefore, no dividends. So what are the family members who are not in the business going to do, although they have shares? I mean, if it goes under the will, everybody get equal shares, no declaration of dividends. Why? Business not good. But you see, brother now upgrading top range BMW, house under renovation, all his children coming into the family business. So obviously not making profit because they have to pay all this. Right? So ownership succession, management succession has got to be looked into. And ownership succession is where this issue of family governance come in. And this is one area very much lacking in Malaysia. And this is why also not very many lawyers do this. In fact, had I not done my doctoral thesis on family business succession, I don't think I would be able to go into this. The lawyers would just be talking legal structures. What's the difference between a trust and a foundation? What's so special about a foundation in Labuan? Okay, what do you do this? But the entrepreneurs or the patriarchs were saying, yeah, but how do I make a decision? You're asking me to instruct you, but I don't even know how to decide. Therein lies the problem. Okay? Now this is just going through here what happens down the generation. You have the business founder, the patriarch or the matriarch. And then second generation, G2, you have the sibling partnership. The third generation is whether you call it a cousin consortium. And the fourth, we are talking about distant relations. So here, when you look at the family tree, from number 1, go to sibling partnership, 3 or 4 children. Go to cousin consortium, they have 3 or 4 children themselves. By that time, there are 20 people. When you get to the 4th generation, the family business will have to accommodate maybe 50 people. How do you keep this family together is what family business succession is all about. And family business is a creature. You know, business is easy. What is the goal of a business? Make money. How you make money? You make sure that income is more than expenditure. After paying tax, of course lah. No use income after expenditure, paying tax in negative. Right? After tax. That is the goal of a business. What is the goal of a family? The goal of a family is to ensure unity and harmony. Now sometimes this conflict, because the goals are different. And one of the most important things in a family is actually to create this unity and harmony, you have to meet together. You have to have a dispute resolution. You know, people have difference of opinion, families will have that too. So you have to have that mechanism in the governance document, which we call the family constitution. Management succession, let me tell you about Syed Mokhtar Bukhari. You all know him, right? One of the richest men in Malaysia. How old is he? Anybody knows? I'll tell you, 59 years old. Okay. How old is his eldest? Anybody know? 18 years old. Why? He got married at 40 years old. He got 6 children. He's 59. How does he plan succession? How does he know he's going to live until 75, which the eldest is only 35? Now, if you think about it, the management succession, what is the best age to hand over the baton to a child? He gets out of university, 25. He has to work outside 3 to 5 years. Then only come in. Then you groom him for 5 years. Paling cepat pun earliest is 35 years old. Maybe 40. Well, how old is he going to be when at that time? So one way is to professionalize the management. And all the more, when you professionalize the management, you have to put the dividend policy in place. It's got to be a strict dividend policy. Minimum amount must be paid. Otherwise, the family won't feel any money when everything, management will just finish. Okay? So young family, entering the family business, grooming the successor. One of the issues again is identifying who is the successor. Not necessarily the eldest son. Not necessarily the eldest child. Not necessarily a son. Maybe a daughter. Not necessarily the child. It may be the in-law who then becomes the outlaw. How do you become outlaw? When your child divorces with that person, become outlaw lah. Huh? But you put him as CEO of your family business because you trust him, and suddenly he is now divorced with your daughter. You think there's going to be a problem? Of course there's going to be a problem. So these are issues which they have to think about. Grooming the successor, passing the baton, right? Business founder handing over to successor, and retiring. Some people don't want to retire. That was also a problem by itself, right? Sometimes you look at leadership. You're talking about leadership when you're talking about handing over the baton. And leadership, you can also look at the leadership of the country, for example. Look at the difference in leadership between Mahathir, Pak Lah, and Najib. One is dictatorial. Other is consensus. Second one is like to please everyone, somewhere in between. Right? I'm not saying anybody is right or wrong. Maybe right in some circumstances, not right in some, whatever. You all make your own decisions. I am talking about leadership attributes. And this goes the same with the patriarch, passing over to the next generation. You have this leader who passes over the baton and suddenly always say, no, you should be doing this, you should not be doing that, and all that. Retired but not retired. If you know who I'm talking about lah. Same lah, leaders come and go, but there are some people just keep quiet. Some people, they don't want to leave the power, The universe revolves around them. Suddenly they retire. What are they going to do? That's why these people, this patriarch, they have to plan what they're going to do. And some people actually have a foundation, a charitable foundation, for them to pass their time and decide what they're going to do with their time and all the money that they have lah. Besides getting another wife like Stanley Ho lah. And of course, we have our entrepreneurs in Malaysia, like Tan Sri Samsudin. He also got married at 80 years old. Yeah. So now, he wants his shares back. He put the shares under his son's name. So now he got wife, he got new son at 80 years old. He wants to restructure everything. How do you think the son feels? Right? Again, issues. Right? No right or wrong one. There's no magic wand here. We're only part of the process. Just one figure there trying to make a living. And you give your 2 cents worth lah. Whatever you feel is right for your client. Now, then we talk about legal structures. After going half around the world, we talk about legal structures. Right? And I want to identify the concept of stewardship. Now, we talk about corporatization. What is the effect of corporatization? Means these people don't get inheritance, If daddy is worth 100 million, if he didn't preserve, he will go under the will in equal shares so everybody get 5 children, 20 million each lah. They start planning what they want to do with 20 million. Suddenly dad says, I'll give you 1 million each. I have 5 million to hold under the estate. 90 million I put under the structure. What are the children going to think? You've taken away my right. So that may be a problem by itself. You see, that's why it's not just about passing money around. It's about passing a legacy. It's about passing a vision. What the money can do for the family and for the community. It has to be like that. Because if just passing money, money is to be spent. But if you talk about the legacy, the vision, that's why passing the baton means someone got to accept. 4/100 passing the baton, you have someone pass the baton, he never accept. Why? Because he doesn't share in the dream. He doesn't share in the dream. So stewardship means that you are entrusted with the family wealth and know your responsibility to pass on to the next generation in a better position than what you receive. So this is where the goose that lays the golden egg, you actually make sure you take care of the goose and pass it to the next generation. Everybody takes the egg. Every generation takes the egg. That's what the concept of stewardship is all about. That's why the 90 million can be preserved and enhanced. Otherwise, it gets fragmented. 5 children get 20 million each. And then they got 5 children and they split further, assuming that it doesn't grow lah. Not everybody can grow wealth. Spend, sure. There are a lot of people who can spend. Also a lot of friends who can help you spend. Sure can finish one. Right? But if you lock it up and you say, okay, strict dividend policy, you will get 1 million every year. And this legacy is not meant for you to live off. You still got to work. Everybody's got to work and make their living, whether it's in a family business or otherwise, but you get $1 million to give comfort to your life. Right? And all the future generations are taken care of in terms of medical, in terms of scholarship, in terms of venture capital, in terms of marriage. All this will be provided for down the line. And that's what family wealth is all about. Right? Now, the concept of stewardship, as I said, entrusted to nurture and protect the family wealth, pass it on to the next generation in a better position than they receive it. Intentions of the ownership, again, to protect against adverse circumstances. You know, all these prenuptials, you give it to your daughter, they get married, they get divorced, suddenly the husband is claiming against all the monies you give to your daughter. Now, if it's locked and preserved, no such issues will come out. Also, something that I always talk about, it affects some people more than others. Drug addiction, gambling addiction, all these sorts of addiction. If they have money, it will be finished. This is also to protect them and to protect the family. Right? Fragmentation. You want to consolidate the business, not to split. You don't want to have feud where 3 children have against 2 children and all that. And let me tell you, Muslim families sometimes marry more than one, yeah? They got more than one family, okay? Well, non-Muslim family got more than one family, right? Some people go to divorce to get another family. Some people have girlfriends. I have one client, well, he doesn't care too much about religion, 60 plus. Second marriage, divorce first marriage, stayed on, got a partner, stayed together like husband and wife, got a child, now 13, 14 years old. And he joking manner, he can say in front of me, you know, yesterday my son asked me, Dad, you and mom never got married, does it mean I'm a bastard? 13-year-old asking like that to dad. He said, I also don't know what to answer. Maybe I get married just to answer him. Well, for non-Muslims, yeah, when you get married, you legitimize him, but not for Muslims. After the act does not cover what happens before, as far as Muslims are concerned. And they will not get under the faraid. Look at the Nazar family. Seems very nice on top. I'm not saying anything bad. It's just a statement of fact. A lot of undercurrent. 3 families. You know, they're doing well as I think they can. But it's got to be resolved. The structure, all that was never really resolved, is still undercurrent. You know, Nazar TTDI, ready to go for listing anytime. It is under a company which is held individual shares under the deceased name, Tan Sri. Definitely go through probate process. That company alone is worth how much already? You know. No, I'm not saying anything bad against the company. I'm just stating a fact that this thing happens, and you plan as best as you can. God is the best planner, right? So, what does preservation structure allows? It allows for the benefits of the family wealth to be passed on to future generation, not merely to one generation. Then we talk about structure, the legal structure per se. We talk about trust. We talk about Labuan Foundation. I don't want to go over too many structures. I think these are the 2 most relevant. I will highlight it. The rest probably you can read on your own. You can ask other lawyers. Now, what is a trust? It is a legal arrangement. It's a tool used to transfer properties from the legal owner to the chosen beneficiary using intermediary called a trustee. When you put assets on trust, it does not become yours anymore and therefore will not be part of the probate process. And for non-Muslims, you either do a living trust where you transfer during your lifetime, or you do it through a testamentary trust where it gets transferred under the will. Okay? But still fragmented lah. Still fragmented. Okay? The purpose is still distribution. Unless, of course, in the trust you preserve it in some way. But a trust under the English law will only last 80 years or 2 generations plus 21 years. It cannot be in perpetuity under the English law. Now, foundations, in comparison, 1 million, 2 million, 3 million, 4 million, 5 million, 6 million, 7 million, 8 million, 9 million, 10 million, 11 million, 12 million, 13 million, 14 million, 15 million, 16 million, 17 million, 18 million, 19 million, 20 million, 21 million, 22 million, 23 million, 24 million, 25 million, 26 million, 27 million, 28 million, 29 million, 30 million, 31 million, 32 million, 33 million, 34 million, 35 million, 36 million, 37 million, 38 million, 39 million, 40 million, 41 million, 42 million, 43 million, 44 million, 45 million, 46 million, 47 million, 48 million, 49 million, 50 million, 51 million, 52 million, 53 million, 54 million, 55 million, 56 million, 57 million, 58 million, 59 million, 60 million, 61 milli it is not under the English law, it's under the civil law, the Napoleonic Code in Europe. And the best way to describe a foundation is actually a combination or fusion of a trust and a company. Now, in a trust, the asset is put under the trustee's name, be it a individual trustee or corporate trustee. But in a foundation, because it's like a company, it is actually registered under the foundation. And you have the council, foundation council, which more or less acts like a board of directors. And you have the charter, the foundation charter, which is almost akin to the M&A of a company. Okay? So the difference, two issues, a lot, but I just want to highlight two main issues. The difference between a trust under the English law and a foundation in Labuan. A foundation in Labuan can be made in perpetuity. That's one issue. In perpetuity, it can go on until doomsday, if that's the way you want it. Secondly is the issue of reservation of powers. Reservation of powers here is always something, not just in our society. You know, you built up millions and suddenly you're asked to put under a trustee and you lose legal control. Nobody wants this, you know. They're very scared, you know. What if the trustee don't follow what I tell them? You mean to say I'm no more the owner? I pass everything just because under this preservation structure. What happens if they don't follow what I say? Now, under the trust, there is someone called a protector. And the settlor, the person who puts the asset under the trust, can be the this protector. And the protector, one of the rights is actually to sack and appoint new trustees. So if you have to come to a position where you tell the trustee, please do this, and they say, I can't do that, then you sack the trustee and appoint new one. But of course, the grounds must be good. So there's always this holding back because they are scared to lose control. But if you don't pass the asset to a trust, it will be part of the probate process. So a foundation is not an alternative. A foundation in Labuan, which must be differentiated between a foundation in Malaysia, is actually just a company limited by guarantee. A company limited by guarantee, also called a foundation here, is not for wealth preservation. Although some people have done it. One of the people who have managed to do it is Lim Gotong. He actually do it under foundation or a company limited by guarantee. But it has got its limitations, right? Mostly, foundations in Malaysia are only used for charitable purposes, like Makna, like National Council Foundation, and becomes a tax game where people give donation and get back receipt, which are tax deductible. And political foundations, where people get grants from the government to do projects, and there are people who make money from there. I know, this is statement of fact. I stand corrected, but that's the way I look at it. So foundation is not a wealth preservation structure in the way that I am talking. A foundation in Labuan is. Now, what is the setback in Labuan? You must have a certain level of financial wealth, because the startup cost is quite hefty, and it is in US dollar. So, and ranging between 5,000, 6,000, 8,000, depending on the trustee company and their level of big company, small company. And then you have maintenance every year, about 2,000, 3,000 USD. So if your company is a small company, it's not worth it. But you go back to the trust. The point I'm trying to say here is distribution, preservation. Preservation, what structure? Cost you have to take into account. Stamp duty, someone come and ask me, Doc, how much do you charge and how long will it take? Classic questions when you do this sort of consultancy. I said, first of all, how long it will take will depend on how much time you commit with me. Everybody is busy. If I can't even get an appointment with you, it will never end. By the same token, how much I charge will depend on, first of all, I divide my role here, consultancy and legal. I segregate. Although I'm a lawyer, I'll be very clear, this is structuring and advisory, separate bill. Legal, separate. Legal will only come when you identify the legal structure. And you will only know what structure you want to do once I give you advice. And I can't give you advice unless I understand what your problems are. So it's like that stage. So charging is a separate thing. Legal is a separate thing. Third-party costs, setting up the Labuan Foundation is a separate thing. Stamp duty transfer is a separate thing. Tax planning fee, separate thing. So, how much is all that? We will only know as we go along. How can you put a ballpark figure and say, oh, I got to know for cash flow purposes? You can't do that. We have to go through the process. That's why you need to really identify high net worth. I say high net worth here for business owners, 5 million USD. 5 million USD net worth lah, semua sekali lah, business. But we are talking about the business lah, because people got personal asset, people got business assets. You know? And then personal asset, up to them lah, they want to put under the preservation structure or otherwise. Okay? Now, this one, I think in the morning you've gone through it. We're talking about Labuan Foundation under the Labuan Foundations Act. You can read the notes. Governance. This is very important. We talk about structures, we talk about issues, but what holds the family together is this governance, this family constitution. And it must support the family as they grow across the generations. And you're not talking about just material wealth, right? And this family governance, family constitution protects the intangible wealth of the family, provides the platform that promotes close communication. Who is going to be in the business, how it's going to run, who makes the ultimate decision must be controlled by the family council, whether you have family members running it or professional management. Otherwise, you might just, liquidate everything, give a fund manager and tell them, I want 20% returns every month, every year. That's it. You don't need to run a business. You just sell everything. Then it's simple, right? So we talk again about family values and visions, right? Now the governance structure is created by the business founder. This is part of the problem. The business founder got no time to think, They're thinking on the business every day, and suddenly you tell them you got to think about the future of your family down the generation. They don't even know how to start thinking. And this is the sort of consultancy when you do, unless they are interested, they will just look at you. No, yes, no, blinking one. No. And then after half an hour, say, okay, I will get back to you. And one client like that, 2 years, nothing. Suddenly the secretary calls me back. Doc, Datuk wants an appointment with you. I'm quite busy this week. Next week, okay? No, Datuk wants this week. It must be this week. Okay, so I schedule everything and said, okay. I went to see him. Sitting at his table, first thing he said, thank you for coming, Doc, at short notice. Excuse me for not standing up. I'm not well. I got breathing problems. I was last 5 days, I was admitted to hospital. This one now, please move. I want it yesterday. And I said, okay, you must commit your time. This is my free time. What's your free time? Directly there, then he called his secretary. Okay, how's my time? This is block. Then you under pressure. But this is where you can charge lah. You make sure you deliver, right? And these are the sort of clients you want. Just focus on your work, do it. But like I say, this sort of thing you can't do alone. You need a team. You need a lawyer, you need people who understand this, because at the end of the day, we're not playing a fool. These people got millions, they can pay anybody, So what do they want? We give them what they want, give them the structure, advise them, and go from there. The business is there. Okay? Family council, this is the highest decision-making authority in the family business. The family constitution is the governance document. The family office, okay? The family office, you can read all this. So those people who have been reading up, there are two types. Family office sometimes gives services. There are some people, anybody read the book Yap Ming Hui on family office? This type of family office is about corporatizing, or not corporatizing per se. It's like running your personal wealth like a business. What he says is, you're an entrepreneur, you run your business like a business, but your personal asset all don't know where. No listing, don't know whether it brings income, rental also never collect, also don't know who's renting and all that. So he says, runs it properly, but if you don't have the time, there are people who can give you services. And This is what they call the family office services, how to invest your money and then get it all done properly, get the proper ROI. Your personal assets should be run the way that your business assets are run. And this is one type of family office. Like here, the standard definition, organization set up to look after the family's business interests. Investment, estate planning, wealth management, the whole works. Right? It can be a single family or a multi-family. And this is the way that it's done in the US. So basically, a lawyer, accountant team up together and set up this family office and gives family office services to this company. If you're just set up for one family, then you are a single family office. If you do it for a few, like we set up a consultancy, multidisciplinary family office, multidisciplinary discipline or expertise, then you serve a few. That's what is happening in the US and in Europe. But in Malaysia, it is actually an ultimate family holding company. So you have this holding company, which is the ultimate family holding company. Why do I say ultimate? Because you may have a holding company, but the holding company also takes loans, also give corporate guarantees. This ultimate family holding company must not be in business, must not be at risk under any circumstances. Its only job is actually to receive dividends going up, passing on, and the shares of this ultimate family holding, which we call the family office, is held under the wealth preservation structure, be it a trust or a foundation, and then distribute from there. So there is no risk on it getting sued in whatsoever way. Right? And it can also hold personal assets which needs to be preserved. So you have business assets, you have personal assets which needs to be preserved. This is to take away from those which you want to distribute. Okay, distribution means during lifetime or after death lah. Okay, so that is another definition of a family office, and this is how it is being done in this area. I'm not just talking Malaysia, because why? In this region, Singapore, Malaysia, Southeast Asia here, we're still very new. This family office concept is where third generation, fourth generation, fifth generation, they got established private wealth, where they invest these monies and get the ROI. The dividends going up, not everything is distributed. 50% is reinvested. Right? So they have all this. But in Malaysia, first generation, second generation, third generation, so you don't need that. I mean, if you are a millionaire, you're making all sorts of money, and someone come and say, let me take care of your investments. You're going to say, look, don't tell me how to suck eggs. I've been making money, you are not in business, and you're telling me how to invest my money? No way. So it does not really jive here. At the moment, our structure under the family office is as an ultimate family holding company. So you need to be aware of these differences in meanings so that we are clear from the start. Okay? Role of tax planning, I've been talking to you all from the start. The transfer of assets can be done during the lifetime or after death, tax efficiency issue. And lastly, okay, how do you implement? First, you need to appoint a family business succession advisor, set up the family office, which is the ultimate family holding company, establish the wealth preservation structure, which is either the Labuan or the trust structure, create a family governance structure, which is the family constitution, operationalize it, get it moving so that this dividend policy gets done. So we're coming to the end. I just want to mention one thing. I have been appointed the external advisor of Azmi Associates, 6th largest firm in Malaysia. We are ready to do strategic tie-ups with accounting firms in respect of your clients in succession planning, and we can assist each other. And so I am actually leading the team over there, and I hope that those who are interested can follow up with me afterwards, and we can exchange cards and set up meetings after that. So I think I'm finished. Any questions? Wow, no question. Either you all like it very much, or everybody fallen asleep, or everybody hungry want to go for lunch. Okay, I ask again. Final questions? Oh, yes. Thank you for asking a question. Yes, can you get a microphone there? Can you
Hello.
just identify yourself, introduce yourself?
I'm Frank
Frank from?
from Exasale Tax Consultants.
Okay, thank you.
Okay, I'm comparing the trust and the foundation in Labuan.
Okay,
And because I think both are quite similar.
okay.
The only thing is, because trust we enjoy P&C type of things. What
Yeah.
about the foundation?
Well, the foundation, to a certain extent, all the assets will be registered. But what is the issue of confidentiality is the issue of distribution. Okay. Yes. The issue of confidentiality comes up because in Labuan, every time you want to put a Malaysian asset into a Labuan trust, you have to get the consent of the authorities. So, to a certain extent, that is not confidential, the assets that's put into it. That's one. But in terms of distribution and how the assets are going to be benefited down the line, it can be made confidential. There are various mechanisms to do that. So, of course, as I said, this is a pro-contra thing between trust and foundation. Confidentiality, the one too confidential, well, it's not a public document, yes. This one you got to register. Yes. So, to that extent, it is not confidential.
That means even the share also have to get the consent from the authority?
All Malaysian assets. All Malaysian assets. The issue is this. You have to identify that the asset is actually operating in Malaysia if it's a business, and therefore it will be subject to the Malaysian income tax. Because otherwise, the purpose, Labuan is actually set up offshore center, midshore center is for tax purposes, and they have a very favorable tax regime there. But it's only for overseas assets. For Malaysian assets, if you register Malaysian asset, that means you're going there for wealth preservation, not for the tax regime. But there are instances where some of our Malaysian clients also have assets overseas. So then they segregate it. Those probably they will have two. They'll set up a Labuan company to hold overseas assets, and then they have a holding company to hold the Malaysian assets. So these are the structures we have to look at, and of course tax efficiency is one of the things that we have to really look at because it's a money issue. Thank you for your question. Yeah. Any other questions? Okay, if there are more questions, thank you so much for bringing a good audience, and I hope we will be meeting again. Thank you so much. Bye-bye.